Can you time the COT report? Hi, it's Charlie giving you Wednesday's video. I hope you're very well. And I'm not going to spend this video showing you what the COT report is. Kim did a really good video a couple of years ago, I think it might have been, on the COT report, on using the COT report. So I'm not going to go through that, but or all the various aspects of using the COT report. What I am going to do is just show you just to give you some hints about how can you actually use it for your own market timing. So first off, how can you use this? This is called Trading Stir, tradingstir.com. It's a free site, hence why there's adverts all over it. But it's quite useful actually for and you can click on the COT reports here. So if I click on the COT reports, and then if I scroll down, you've got currencies, you've got COT reports for the grains, metals, gold, silver, and all sorts. So you can look at stock indices, COT reports and stuff. So what I'm looking at, I've taken the euro here because it's big old euro. Dollar is so important, being the biggest currency against the dollar itself. So I'm not particularly interested in this information. I've clicked on the legacy report, which is the old school report, which I prefer. And so because all I'm really interested in is what the non-commercials are doing. The non-commercials are your hedge funds and the likes, okay? So speculators in the markets, okay? The commercials are those who sell to the speculators. So they'll be the banks, the big brokerage houses, the big banks, your Deutsche Banks, your Barclays, Capitals, you name it, your Citibanks and stuff, who make markets in currencies, and they'll be selling to the big hedge funds. Hedge funds don't use the sort of brokers that you might be using. Hedge funds will be using the big banks, your JP Morgans, your Bank of Americas and stuff. So anyway, that's who the commercials are, and so the non-commercials is what we're really interested in, because all the commercials are doing, they're making the market for the non-commercials. So they're going to be doing the opposite of what the funds are doing, because they have to if they're going to sell. Because a fund will go to, let's say, Citibank and say, right, I want to buy 100,000 contracts of euro dollar. Well, if they're buying it, that means that that Citibank are having to sell to them. So they'll just be showing the opposite. So what I'm going to do now is scroll down to when we get to the chart here. This is what I want to get to. So when you come to the chart, you've got your commercials and your non-commercials and your non-reportables. Non-reportables are merely those the transactions which are not big enough to to be reported on. So we're going to get rid of those. Just click on that and you get rid of that. There's no point in me having the commercials in, because the commercials, as you can see, is almost like a mirror image of what the funds are doing. So there's no point in having that on either. So we're going to click off of that. So all I'm really interested in is the non-commercials, the blue line here. Okay, and what we've got above is a chart of effectively the euro dollar. So now what we're going to do is we're just going to take this out to a 2-year. So we get a picture of what's been going on this year. So the euro dollar topped out right at the beginning of January, actually, fell for a few months, then came up, almost did a double top, not quite, and then has fallen away since the end of May. Generally speaking, nothing too major, but it has come down there since then. So what can we see that the funds were doing? Okay, so what we already can see is that from September of last year, and there was a consolidation phase in the euro dollar where it went sideways for a month or two, a couple of months, I think it was a consolidation. Then the euro rallied into the end of the year, into right away to the end of December and the beginning of January. What you can see at that point is there weren't as many contracts long. So what this is showing us down here is the total number of contracts which are either are they net long or net short. Okay, so you can see that they were net long, but they weren't going to new highs as the euro contract was going to new highs itself. So it wasn't confirming that price action. So that's one thing that I've identified with this, that generally speaking, the funds will be following the price action. They're pretty good at doing that. Now, if you watch my videos for some time, if you think about what retail traders do, retail traders, as price goes up here in whatever market, they tend to be doing the opposite. So they'll be net short a lot of the time because they're idiots a lot of the time all around the world. Bless them. I don't mean that in a derogatory way personally. I just mean as traders, they're not good traders. So that's what the collective do in retail. So retail tend to short as the market goes up, thinking that they're trying to capture a top. Now, don't get me wrong, there are times when markets are making tops, and some retail traders are very good at catching that. But the masses of retail traders tend to do that all of the time, and they aren't right. So this is where your funds will be different. The funds, when price is going up, they will actually get in on the long side. You can see they go from being below being net short down here to then, once we got into, March of last year, we can see they went net long. Obviously, they can take a little bit of heat, and then the euro started going higher here. So what we can do, we can see that they are sort of confirming what's going on in price. Likewise, at the moment, that over the last few months, as the euro has been coming down here over the last few months, we can see that the number of long contracts has been coming down. In fact, to the point where, as of this last week's COT report, they have now gone net. You can see over the last few weeks they're net short now on the euro dollar. Okay, so not surprising considering the euro's been coming down, but it's not always the case. So if I take you out to a higher time frame here, so I'm just getting more information here, we can really see again another divergence here. Now I've zoomed out, and what was going on at the beginning of 2017? That was one of my biggest trades that I'd had up to that point, singular trades in 2017 when I was buying euro dollar on a swing basis. And what was going on here again, that right way into the beginning of 2017, they were accumulating. Price had been coming down, but they were accumulating. And you can see that actually when price made these lows here in 2015 and then again in late 2015, you can see that they weren't confirming those lows. They weren't pushing to new lows in their total short positions. Okay, so they'd actually they'd been coming out of their short positions bit by bit, to the point where we got into that early part of 2017, right at the beginning of 2017. I've got it there. It's about there. It was right at the beginning of January. It was January 1st or 2nd, I think I did that trade. But we can see down here that they'd made a higher low really in their number of short positions. So they weren't confirming, even though the euro was going to new lows, they weren't increasing the number of shorts that they had in the market. And in fact, we can see that in the very short term, if I can zoom this to that point, you'll see where I'm, and then if I take it back, there we go. There it is. There's the bottom there in 2017, and you can see what was going on. They were starting to drastically reduce the number of shorts that they had in play there. So the answer to this video was, can you use the COT report? I can't remember actually now what I called it. Can you time the COT reports? Yes, I believe you can at times. It's not going to be all of the time. A lot of the time, what they're doing is just going to be mirroring what the price action's doing. But now and again, and if I take this to 2018, now and again, you might just find that their activity is diverging from what the currency market is doing. Just like if I take this to the beginning of this year, like I've already said, I've got this zoomed out now. the right away into the end of December and the beginning of January this year, the euro dollar made new high, but the funds were not making new highs in their total long exposure. There you go, a little bit of information there for you on, and a little bit of food for thought in using the COT report this week. Take care for now. As always, give us a thumbs up if you like the videos, and I'll see you at the end of the week for the next one.